have you ever been sitting there at a casual job having the worst shift ever, and then a customer goes ahead and spills their drink all over the floor? Just to make matters worse, you don't have any cleaning products to clean their mess. You don't want to waste your own hard-earned money on it. After all, it's not your fault. So what do? Well, you use petty cash, of course. But what are petty cash funds, you ask? Well, petty cash is a set amount of cash put aside by a business for minor expenses such as cleaning supplies or stationery. Petty cash is used when an expense is so minor it is just more efficient and easier to use cash instead of credit. Now that we know what it is, let's go over how to establish a petty cash fund. It begins with a business, for example, Alex's Clothing, starting a fund of $200. To do so, Alex, the custodian, debits petty cash and credits cash. Therefore, assets are increased and then decreased to balance the entry. Alex will then give the required petty cash amount to the employee requesting it, or if the employee was unlucky enough to already pay for the expense, Alex will reimburse the employee. It is incredibly important for all employees to keep all receipts from the expenses paid with the petty cash, as all journal entries are made at the end of the month. At the end of the period, the petty cash is replenished back to its original amount by creating a petty cash replenishment fund form. When the remaining cash from the fund is calculated, the business, in this case Alex's Clothing, cashes in a check for the total amount of expenses, which will bring the fund back to its original balance of $200. So if Alex's Clothing spends a total of $50 of its overall $200, a total of $150 is remaining, which means $50 is required to replenish the fund and bring it back to its original balance. After receipts are read and they match the required replenishment amount, a check should be cashed for $50 and expenses should be recorded in a journal entry. So what if there's been a mistake with the receipts or incorrect change and there's a discrepancy with the replenishment amount and the amount collected from receipts? This is when businesses use a cash over and short temporary expense account. The discrepancy is charged and can either be recorded as a credit or a debit. If the expenses are greater than the amount necessary to replenish the fund and there is a cash shortage, then the cash over and short account will be credited, or the account can be debited if the expenses equal less than the replenishment amount. Once these errors are fixed and recorded and the account balances, the petty cash fund will be restored to the original fund, ready for the next period of petty cash expenses. Thanks for listening, guys.